Hello everyone, we are pleased to welcome you to this meeting presenting Wavestone's revenue for the third quarter of the fiscal year 2022-23. Today the speakers are Pascal Imbert, co-founder and CEO of Wavestone. Hello Pascal.
Hello Justine, hello everybody.
And Laurent Stoupy, CFO of Wavestone. Hello Laurent.
Everyone, hello Justine.
Laurent, the floor is yours.
Thank you, Justine. I start with Wavestone's business activity in Q3 2022-2023. Revenue was 139.1 million euro over the quarter, up 14% compared with Q3 in the previous fiscal year. As a reminder, the total scope includes the acquisitions made since April 1st, 2021, Everest Group Consulting, Y Innovation, New Vantage Partners, Nomadeis, Pen Partnership, and Coeus Consulting. At constant scope and forex basis, organic growth was 6%. Note that Q3 had a negative working day impact of minus 1.6%. Over the first 9 months of the fiscal year, revenue increased by 11%, reaching 376.2 million euros. At constant scope and forex basis, growth was 5%. The working day impact over the first 9 months was minus 1%. The consultant utilization rate fell in Q3 due to the arrival of numerous employees since September. Over the first 9 months of the fiscal year, the utilization rate was 74% compared with 75% in H1. The positive momentum on sales prices was confirmed in Q3. As a result, over the first 9 months, the average daily rate was 886 euros, up 4% compared with 854 for the whole of the 2021-2022 fiscal year. The integration of Pen Partnership and Coeus Consulting contributes 10 euros to these figures. At constant exchange rates over the total scope, the average daily rate was 879 euros, up 3%. There was a solid rate of order intake in the last months of 2022. As a result, the firm's order book had 4 months of work at the end of December, compared with 3.7 months at the end of September. On human resources, we maintain a sustained pace of recruitment. We now expect to significantly exceed our annual plan, which aims to recruit over 1,000 new employees in the 2022-2023 fiscal year. Turnover slowed during the quarter. Over a rolling 12 months period, it stood at 17% at the end of December, compared with 19% at the end of September. This is obviously a positive development, even if it is still too early to consider that this trend is certain for the coming quarters. Lastly, Wavestone workforce increased by 340 people over the first 9 months of the year, to which we must add 126 employees from the Nomadeis, Pen Partnership, and Coeus Consulting mergers. At December 31st, 2022, the firm's workforce was thus close to 4,200 employees. I hand over to Pascal.
Thank you, Laurent. As you could see, our third quarter was in line with the first half of the year. Our KPIs remained strong, as did sales, in particular with a good order intake in December, which is important because, as you know, when it comes to sales, December weighs much more than a typical month. Nevertheless, at the end of 2022, we began to feel the first effects of the slowdown, something we have been discussing for a few months before the end of 2022. A slowdown that is reflected in increased caution from clients in reaction to worsening economic conditions. The slowdown is especially marked in sectors such as industry and insurance. The French public sector is more difficult too, with a negative backdrop of a controversy that has been underway for almost a year, a controversy that is called in France McKinsey Gate. The good news is that this slowdown remains very gradual. It's much less severe than what we feared. And in fact, some sectors continue to offer promising opportunities, sectors such as banking, energy, and luxury. Our third quarter figures and the context I've just set out enable us to confirm our annual financial objectives. So for the whole of the 2022-2023 fiscal year, we're aiming for a consolidated revenue of over 525 million euros and an EBIT margin of about 15%. I remind you that these objectives take into account the consolidation of our last acquisitions and partnership, consolidated for 8 months over the entire fiscal year, and Cois Consulting consolidated for 6 months. I also remind you that the firm confirms its targeted external growth strategy, our search being mainly aimed at the US, but without ruling out tactical acquisitions in other countries. That's it for our comments regarding our Q3 figures and our outlook. Laurent and I will be happy now to answer any questions you might have.
So you can now ask your questions. To do so, please unmute your mic. So you can unmute your mic if you have any questions. And if there is no questions, Pascal, I let you continue. Oh,
Hello,
yes.
hi.
Great.
Hello, hi. It's Peter Testa from One Investments. Maybe just to understand a bit better what you were talking about by being a bit slower at the end of the year when you have a larger backlog and you're hiring above budget. Can you just give a sense of sort of how you balance off those two factors? The fact that you overall more willing to put resources behind growth, but you see some caution. What that really means? Thank you.
No, it means that we were anticipating for a slowdown of the market since last summer, roughly. And so we have intensified our sales investment. And so we had a good order intake by the end of the year. And in fact, something comparable to the order intake we had during Q3 in the previous year, but with much more sales investment than what we had to invest last year. So we see that there are maybe less opportunities on the market. In 2021, end of 2021, all sectors were buoyant, whereas now we have some sectors that are more cautious, even if some sectors remain very good, such as banking, energy, and luxury. So the market is cooling down, but it doesn't mean that it is a market that is entering a sharp and global slowdown. It's something more gradual, with some differences from one sector or one client to another. And there is a lot of room in order to continue to generate growth. And that's what we try to do. We are quite successful in Q3 regarding our sales. And I would say that for the time being, looking at what is coming next in the next months, we remain reasonably optimistic. I hope this is helpful.
Yeah, no, indeed. And so would you say that the tied up business is more coming from large existing relationships where you're just gathering more, or are you through this extra sales and marketing coming into new relationships, new areas?
No, you're right. We always, when we feel that the market is cooling down, we always tend to invest on existing clients, because here the return on investment from our sales investment is much higher. So it's a way to be a little more cautious. This is not when the market is buoyant. It is a good timing to open new clients and to try to enlarge our footprint. And now we are, except with the exception of some clients we are targeting in the luxury sector, where we are not very developed for the time being. We tend to focus mainly on our existing client, because we know it's a safer way to go through a market that is a little bit slower.
And last question for me, can you just give some sort of sense as to how this environment is influencing your pricing versus cost of employees? So you said you slightly lower turnover, which probably helps, but cooler market may not be as good as the other side. Just how that balance is evolving, please.
For the market, for the time being, evolution of prices is still quite good. We are not pushing very hard on prices, but nevertheless, we can see that we are quarter after quarter we are optimizing our prices. We were able to negotiate throughout 2022 new price cards, rate cards with our clients, and we remain quite optimistic for the timing. I would say that our first concern for the timing is more about volumes than prices. For the time being, our clients are not very focused on trying to optimize their prices. I'm sure that if the market slows down even more, maybe things will become different. But for the time being, the overall environment regarding prices remains good, which means that we are not sure of that at the beginning of the fiscal year, but in fact, we have been able to optimize our price to salary ratio over the current fiscal year.
That's helpful. Thank you very much for the answers.
You're welcome.
So you can unmute your mic if you have another question. Pascal, I'll let you conclude.
Well, so thank you very much for attending this conference call regarding our results for the third quarter of our fiscal year. Our next meeting will take place on April 27 for the publication of Wavestone's 2022-2023 annual revenue. Thank you very much once again, and have a good end of day. Goodbye.
Thank you. Bye.